Hello everyone and welcome to this short educational video by Cilinix FX Capital. In this video we will talk about candlestick patterns used in trading Forex, trading stocks, trading options. And if you don't know what candlesticks are, you can look at the video on our channel, which is a very in-depth explanation about what candlesticks are and how to read them. But in this video we will analyze candlestick patterns, which are certain patterns made by candlesticks. And they can be single pattern, dual pattern or triple pattern, basically indicating how many candlesticks it takes to form the pattern. And they can give you an indication of what price is going to do, and it is part of technical analysis. So let us start with single candlestick patterns. I have here photos of all the patterns, or the most important patterns of one candlestick, a single candlestick pattern, and the name next to it. If the name is in green, it is bullish, and it means the price tends to go up after the pattern. And if the name is red, it is bearish, and the price tends to go down after the pattern. But let's start with the spinning top and the doji, which are these two. And these two are neutral patterns. As you can see, very long shadows, small body. Here also, like almost no body, very long shadows, which means the price is very indecisive. It doesn't really tend to go one way. These are neutral. Then you have the white and the black Maribozu, or the green and the red Maribozu, which are, as you can see, there are no shadows. They're just straight moves up. Very bullish if they are white or green, and very bearish if they are red or black. That depends on what colors you are using for candlesticks, and if it's traditional or more modern, the chart you are using. And then you also have the hammer and the inverted hammer. As you can see here, price is going down. It went down here as well, but then it went up, and price actually closed positive, creating some sort of hammer, and that is bullish. And here you can see price is going down, and here you can see that the price was going up, but then perhaps maybe down again, but price closed in the positive in the end, which created an inverted hammer, basically this pattern, but then the other way around, also bullish. And then we have two bearish single candlestick patterns, which are the hanging man and the shooting star. I did not make up the names. And here you can see price is going up, and here you can actually see that price is going down. This one looks very much like the inverted hammer. Price was going down already, perhaps then pushed up again, but still closed negative, which means price is going down, and this is bearish. And here you can also see price is going up. Price went up again probably, but then went down all the way, and it actually closed negatively, which also is bearish. And I have to tell you that these patterns can help you with your technical analysis and can help you with your analysis of certain pairs, but they are not a one-way ticket to profitability. If you see these candlestick patterns, and that also goes for the dual and the triple candlestick patterns, this one does not necessarily mean price will go up. This one does not necessarily mean price will go down, but they can help you. So now we will go on to the dual candlestick patterns. I have 4 patterns right here, 2 bullish and 2 bearish. Let's start with the engulfings first. Engulfings are basically, a bullish engulfing is one candlestick down, then the other one opens at the price it closes, and it engulfs the previous one, and this is bullish because it bullish engulfs the bearish candle at the beginning, so price tends to go up after this one. And here you can see price was going up, and then there was a bearish engulfing. The price opened at the top of the last bullish candle and actually engulfed the previous bullish candle, which is bearish. Price goes down. Here you can see tweezer bottoms. Price is actually going down. This is a reversal pattern. Price is going down, has a shadow here, then made the shadow again, but at both times price was not able to get through this bottom. And here you can actually see that the price closed positively and price goes up. This is a bullish pattern, and here you can see that price was going up. Price still went up, but had a shadow up here, did not go through this price point. Then here it did not go through that price point again, and price actually closed negatively, which is bearish. Price tends to go down after this tweezer top. So what you can do with these, I will also after this we'll get to the triple candlestick patterns, but I think the best thing to do is actually to write these down, just draw them in a very traditional way. Just draw them and see if you know what they mean, because obviously these are just patterns, very easy to spot, but they actually mean something as well. Like what I said here, that the price was not able to get through this point where both these shadows ended. Write them down, create a cheat sheet, and use that to improve your trading. And now let's get to the triple candlestick patterns, which are arguably the most reliable patterns because it takes 3 candles to form, and they are less frequent in the market, and they tend to give better results. And I have set these up that the bullish ones are on the left side and the bearish ones are on the right side to create more of a structure in the slide. We will start with the 3 white soldiers, and I will also tell you the conditions which these patterns need. So here you have the 3 white soldiers, basically 3 bullish candles after another, but the second one should not have a big top shadow, and it should actually be bigger than the first candle. And then we'll go on to the 3 black crows, which is basically the 3 white soldiers, but then the other way around. These are 3 bearish candles, and the same goes for this one. The second candle should be bigger than the first one, and it should not have a big lower shadow. Then you have the 3 inside up and the 3 inside down, which are reversal patterns. You can actually see price is going down, and then you can see that there is a small bullish move, and this first bullish candle should be at least half as big as this bearish candle, and then a bullish candle should close higher than the beginning of the first bearish candle, which it did because it closed here and this one opened here. And the same goes for the 3 inside down. Price is going up, it's a reversal pattern. This one reached till halfway this first bullish candlestick, which it needs to do, and then this third bearish candle closed under the opening of the bullish candle, which is a confirmation that this is a 3 inside down, and it could signal a reversal. And then we have the morning star and the evening star. I think they are very easy to spot, these ones, because here you actually have some conditions, as I said, with the second one here and second one and third one here. Same goes for these two. With the morning star is basically also a reversal. Price is going down, very big move down. Then you have indecisive, a doji, as you could have also seen at the single candlestick pattern chart. And then price actually went up after the indecision. This indicates a reversal in the bullish way. Then here you can see price is going up. Then you have an evening star, doji right at the top of these bullish moves, followed by a big bearish move, and then price is going down. This could signal a bearish reversal. So then I have taught you all the candlestick patterns which are most well known throughout the Forex industry and the trading industry. And these patterns, like I said earlier, you can make a cheat sheet with them, and you can use them to help you with your trading, maybe create a bias, maybe create some more confirmation for your trades. And it's at least good to know what they actually mean within the market. So write them down, actually draw them as well, and see if you actually know what they mean, and then it can also help with just a better overall understanding of the market itself. And with that, we have reached the end of this video. I will hope to see you in the next video, and be sure to check out our channel for more educational content for Forex and trading in general.